Good Monday morning, Market Chameleons. Everyone joining us for the first time. Thanks for checking out the Market Chameleon pre-market show with myself, Will McBride, and the main man, Dimitri Pargamunan. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer? It's up there for everyone to see.
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
All right.
And let me share my screen. If you guys are joining us for the first time and you have any questions, you can put those questions on the live chat on YouTube. Will's watching it. He'll read them back to me. If you want to come on a show and ask your question live, we also put out a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get over to Zoom, click on raise your hand. There's a button, to click on that button that says raise your hand. That will allow you to come in, ask your question directly. Everybody could hear it. You don't have to turn on your video camera. If you have any questions about Market Chameleon tools, data analytics, if you have other questions, strategies, or you want to share things that you've been doing that have been working out for you, or you've seen something unusual, you're welcome to come on the show. That will benefit the rest of the community. While we're waiting for any questions to queue up, we'll start out with the pre-market report, take a look at what's trading in the pre-market hours. Maybe today, I'll also look at some earnings insights, see what's been going on so far with earnings in general. How have stocks been performing after reporting earnings, and how have the options been performing, specifically the straddles, after these companies have been reporting earnings. So we'll start out with that. And let me know, Will, if you have any questions coming in.
We did have one question before you get started on the pre-market. Laurent was asking, off the top of your head, are you aware of an ETF that trades like the US dollar? He's looking for a US dollar ETF. He found DXY, but he thinks that's a future. It doesn't show up on our site. I don't know if you know of anything off the top of your head.
Okay. Well, I mean, I guess the US dollar against what, right? So the US dollar relative to some benchmark, right? It's when you're saying when you're saying an ETF that trades like the US dollar, I guess relative to what asset, because there's US dollar versus euro, US dollar versus yen, US dollar versus, baskets of goods. But, I mean, pretty much everything we're seeing is right relative to the US dollar, but it would depend on what benchmark you're looking at.
The USD index, he's saying.
I mean, I'm not sure what that means, like a basket of.
I think he wants something that reflects what the US dollar is doing in the marketplace, but I guess that would have to be compared to something, right?
Yeah, exactly. It would have to be compared to something, right? So,
like even like, I'm like thinking, because I know you can trade. There's a Japanese, I think there used to be ETF. I don't know if there still are, but there were currency ETFs, right? I don't know if there's one that reflects, but again, I don't know what to be matching up against.
Right. It would have to match up against something, right? So the US dollar trades on a relative basis for something. So, but I believe that there's a basket of currencies that, if maybe that's what you're looking at, like maybe a basket of currencies. So I'm sure there probably is an ETF that does that. I'm not, off the top of my head, I'm not sure.
Well, the one he was mentioned was called the DXY. It's described as a complete US dollar index.
DXY?
DXY. Nothing pops up on Market Chameleon, but
yeah,
it's the dollar index spot. That's how Bloomberg describes it.
I mean, yeah. Like I would need to know, like, what
but
is
it looks like it's a future, and I don't know anything about it. So obviously you don't either. So it's
Right. Like when you think about the dollar appreciating, it's appreciating against something or depreciating against something, right? Like, is it because it's how many dollars buys something else, right? Um, Oil, the stock market, all the right. It depends on what you're pegging it to. Um, but I'll take a look at the DXY. I'm not sure what that is. Maybe I'll read about it more after the show.
all right, cool.
Try
Thanks,
to-
Steve.
So, yep. So this is the pre-market report, right? These are stocks that are trading in pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. We have 66 stocks that made our percentage gainers list, 42 on the decliners list. So from that perspective right now, looks like we're set up for slightly more bullish bias at the open. I'm going to filter out this list for just stocks that are part of the S&P 500. This way we take out small cap stocks, ETFs, leverage products, preferred stocks, closed-end funds, all this just to look at what's going on in S&P 500. To do that, we can use the filters above. This filter here in ETF and drop it down. I could select one of these ETFs. The first one, SPY, is the S&P 500 ETF. By selecting it, this list will get filtered by the holdings in SPY, which are the S&P 500 constituents. So here we see 7 stocks made our percentage gainers list, 3 on the decliners. So not a big list, a little bit more slightly bullish than on the bullish side, but again, not a very big list here. The only one what pops out at me is I think these are stocks that are in the oil industry, and they've been getting kind of hit. I know Occidental Petroleum is this is the one that Warren Buffett's been buying.
Yeah,
20% of it. Yeah, so they took quite a hit, but today up slightly. I think the Fed's meeting Wednesday, right?
hey D, you may want to D.
Yep.
You may want to wiggle your mic. It sounds like you've gone underwater.
Get a little bit closer. How's this?
That's perfect. Thank you.
Okay. Fed meets Wednesday, right? The expectation is that the increase in interest rates by 0.75%. I think that brings us up to 2.5% at this point. Right now, it looks like the marketplace might be signaling that they're seeing enough potential weakness in the market that now there's some indicators that the market thinks they might have to lower interest rates going into next year, right? So that's what kind of the markets are kind of signaling, but there's mixed bag. Nobody knows, right? Nobody knows where the inflation's going. You're seeing a lot of divergent opinions right now. Some of the inflation in the commodities are easing, so that's good news, but the labor market is still very tight. And you're hearing stories or per Bloomberg that now we're facing situation where those supply chain bottlenecks, that labor there is potentially going on strike. They want to increase their wages. They've been under pressure. They've seen their wages relative to inflation decline. So we might still see some inflation on that side of things. And what have you been seeing about inflation? Besides some of the commodity prices definitely coming down, that's good news. Looks to me real estate prices are leveling off at this point.
Well, certainly the stories you hear are negative in the real estate market. Like buyers have just stopped showing up, right? So people who are going to have to sell are, I don't think we've seen the effect of these new 30-year mortgage rates yet, and it may not be till after summer you start seeing people who really, because a seller is always showing up in the real estate market. Someone has to sell for whatever reason. They're moving, they've passed away, estate sale. So the price for someone who needs to get a mortgage is going to be lower. It just has to be in a lot of markets.
Yeah. So and that's what I'm hearing as well. General slowdown in activity, but the prices still are having, come down significantly. So prices still stay, I guess, as far as like sellers go, they're not decreasing their prices yet. But definitely a big slowdown in activity. Refinancing, that's dead, right? Nobody's refinancing at higher interest rates. So that portion of it is dead. So in the real estate market, definitely a weakness, but so far, I think that we've seen some deflationary factors coming in from the commodities market. So that could be a little bit of good news on the inflation front. Let's take a look at, if there are no questions, let's take a look at the earnings, because we are in earnings season right now. So I'm going to come over here, take a look at some of our reports and see what stocks have been doing after reporting earnings. We know a lot of stocks up to earnings have been getting repriced based on, new estimates, trying to get repriced based on, where interest rates are heading and so forth. So how have these companies been performing in general after reporting earnings? So this is looking at stocks that report earnings. The news is out, the information is out, the data is out there. Investors have, a chance to put all the inputs into their models. So that day, by the end of the day, how did the stocks perform after reporting earnings? So here we see 53 stocks closed higher from the previous day, 46% of them lower. On average, there's a gain of 0.2%. So these are out of the 314 stocks that we tracked. So we could see here that is kind of in line with the 3-year average, right? So the 3-year average, we usually see after reporting earnings, a little bit more than half are up, and on average, they gain around 0.25%. Let's take a look at just S&P 500 stocks. So that's so far all the stocks, these 314 stocks. So we're comparing the same 314 stocks in the basket so far. So in the S&P 500, so I'm looking at SPY Holdings, we tracked 87 stocks reported earnings so far second quarter. Here, 53 stocks were higher in a day, 47% lower. Really, it's a break even here. And, as far as the number of stocks higher than lower, it's a little bit been better than 3-year average. So maybe leading up to those earnings, whatever discount the markets were giving, maybe a little bit of an over discount. So we see more stocks popping up than down. Let me look at the QQQ as well. Let's look at the NASDAQ 100. So here, 56% of them, so far only 9 stocks that we're tracking, 56% were higher, 44% lower, for an average gain of 1%. Right, so we could see here that's definitely better than the 3-year average. So far, out of the 9 stocks that reported in the second quarter, doing better than 3-year average. Let's take a look at, so here's a 3-year average. You can see here for the same 9 stocks, 56% of them were lower, for an average loss of 0.3%. We're up 1.1% here. Let's take a look at the straddles. How have the options been performing? So this is looking at the magnitude of the moves, right? Not the direction, but the magnitude of the moves of these stocks versus what the straddle was predicting. So I'm going to go here, earnings. Let's go to option straddle. So these are the 223 stocks that we tracked so far in the second quarter. The options, right? This is looking at the option straddle. 41% of the straddles from the buy side were profitable, 59% were unprofitable. Okay. So these are, remember, not the average, the quantities. On average, though, if you did all these straddles, there's a 4.3% gain, meaning that the straddles that were profitable, that went up in price, were the magnitude of those profits were big enough to offset the losses in these 59%. Okay, so on a 3-year average, we see those straddles, are performing better than the 3-year average, even though only 41% of them were profitable versus 59% unprofitable. And I don't think, Will, that is that surprising so far, because I think in a environment where interest rates are moving higher and trending higher, I think you start seeing more volatility. Maybe that the markets do just need to adjust to that. But in my opinion, as interest rates move higher, cost of capital, cost of financing is increasing. I think we start to see higher volatility in risk assets. Let me just take a look down here. So you could see here that this was, I think, in the last, since 2019, so far, this is turning out to be one of the best quarters for straddles. Let's take a look at the S&P 500. This is looking at all the stocks. Yeah.
We got a quick question. Could you just go through how you got to this particular page? What you're
so under earnings, under the earnings tab.
Hey, you're gonna have to go to your mic and jiggle it.
Under the earnings tab up top. Yep. The first report I looked at were earnings stock moves. Right now we're on the straddle performance. So the earnings insights over here. So I went up here. This was the first report, and right now we're on the straddle performance. So you could see here that this has been, so far the best performing quarter for the straddles since 2019, since we're going back over here. Let's take a look at just S&P 500. If we see the similar situation, so SPY, I'll reload that. So here, similar situation, we see 38% of the straddles were profitable versus 62% unprofitable. In other words, most of those straddles, if you were buying, ended up being a loss. But if you took the average, right, if you took the average, on average, it turned out to be a gain of 7.3%. So we're looking at what 86 companies reported so far, 7.3%. And that also is turning out to be, as far as returns, the best so far we've seen, and we're going back to 2019, third quarter 2019. Usually those straddles lose on average up 7.3%. I'm going to come down here real quick. And you could see here that this is a distribution of returns. This one is to the upside. So this is saying, straddles that were profitable, straddles that were unprofitable. And you could see here, above zero, 38.4% were profitable versus 3 years average of 34.6. Above 75%, that 10.5% were profitable versus 6.7% on average. So these were straddles that gained more than 75% after reporting earnings. So every dollar invested in a straddle was worth more than $1.75 after reporting earnings. Okay, so that's the distribution of returns of the straddle. Let me take a look at this. This is kind of a similar situation. It just gives it more buckets. So you could see here, big. There's this gray bar is showing the 3-year average. This blue is the most recent. So you could see here between 0 to 25%. So more lost between 0 to 25%, 40% versus 33.7. But here were the buckets where there's big gains. So that, again, that's kind of a histogram of the returns. So you see a big increase here. Straddles the return between 75% to 100% increase, almost double what they usually are, 5.8% versus 5.8% of the straddles return between 75% to 100% versus a 3-year average of 2.5%. So more than 2 times. Straddles that return between 50% and 75%, that also almost doubled. Let's take a look. This is SPY. Let's take a look at QQQ. So these are NASDAQ 100. So we see the 9 companies that reported. So 56% of those straddles were positive versus 44% negative. Average gain 4.4%. So not as, on average, they lose 2.5%. So definitely, better than the average, not the best that we've seen in the NASDAQ, but definitely better than the average. If there are no questions, let me take a look at one more. Let's see what's coming up on the earnings front. So we talked about these benchmarks, but I'm not going to go over it right now. Let's just see what's on deck, some of the big companies. So you see Microsoft, July 26th after the market close, Google, another one coming up tomorrow after the market close, Visa. So tomorrow after market close, big day. Then Meta, which is Facebook, is the next day. We got MasterCard, Pfizer, Apple, big one, July 28th after the market close. Amazon, also same day after the market
It seems
close.
like all the big tech ones are coming up this week.
So a lot of big tech ones coming up this week. Definitely Google, Meta, that's going to give us huge insights into the digital ad space, right? Because that's where most of their revenue is coming from. So that's Google, Meta, Apple. That will be an interesting one as well. Some people are now saying that, I'm seeing weaknesses there. Amazon, that'll be interesting because they're going to be talking about their cloud business. So people are watching that one closely. Obviously, ExxonMobil, we'll get insights from them on the oil industry. So a couple big, a lot of big ones coming up this coming up week.
Yeah, we did have some questions, D, relative to Strangles.
Yep.
I'm assuming it's like the information you were showing relative to the straddles. Is there anything like that for Strangles to see how they've performed during this earnings season? They're asking by deltas. Both Laurent and I know Mike McRae likes trading those wings around those far out 2 or 5. I think they were mentioning 2 or 5 deltas. Is there a way to see how they've performed in general?
Well, not in this report, not in the report that we're seeing here. You would have to, maybe bring up. So that's what, let me see here. If you're looking for just a kind of a specific, now this is just this quarter, right? This is for the second quarter.
And this is only for the earnings out so far.
Right. This is only for the earnings out so far in the second quarter, just to give you guys an idea how it's been going so far relative to history in the second quarter, right? Which I think began, I don't know, earlier, like with the bank stocks. right? It's the bank stocks.
You know, we're about 2 weeks into the earnings cycle.
Yeah, starting I think this month. So this isn't looking at, a specific stock, history. If you wanted to do that, you could go over here. And let me see, earnings option strategy screen. So you could load this and if you just wanted to see even something upcoming, like what were we talking about? Google.
Yeah.
Here's Google. Obviously they didn't report yet, right? So they're on deck to report coming up, but you could look at all these different strategies. Here, let's take one out. Strategy type, what strangle? So let's say a long 25 delta strangle in Google. Let's see, filters that out. So here's a long 25 delta strangle. It's giving you different date ranges around earnings. So let's do range day before, 1 day before, and let's do the day of earnings, by end of day. So here's how Google strangle tended to perform, if that's what you're looking for, right? So again, this is a different type of report. I'm just trying to filter out one stock, one type of strategy, and I'm designating an open date and end date. So here we see that from the long side, that the straddle was probably so far in the last 12 observations was profitable 42% of the time, but on average gained 3%. Okay, this is the median return, right? So this is the average return. This is the median return in the middle. So obviously the average can get pulled up if you have one really big win. Here's the best return, 315%. Worst, lost the whole thing. It's a strangle, could go to 0. If you wanted to see the historical observations, you click on there. And these are the historical observations. So these are the dates, historical dates. If you want to open the options chain and look at the snapshot before to after, you could do that. Close that. But here's the long 25 delta put, long 25 delta call. So you could see where the put was the day before, where the put was priced the day after. This is the 20, remember, downside put, upside call, 25 delta. This is where the call was priced the day before. This was where it was priced the day after. So you could see here that straddle lost $56.50 from the day before to the day after. So you'd add these up, midpoints, then compare them to the midpoints over here. That lost $56.50, which is 80% of its premium the next day. And this is what the stock did that day. It was down 3.7%. So these are your historical observations. If you just wanted to compare how the straddle or strangle did, something like that. So that's how you could look at it from a strangle. And of course, you could go to the options chain and set it up as well.
Perfect. We did have a question from a chameleon I haven't seen before, Gabriel. He's asking, how is the average return of the strategy backtest results calculated?
Say it again.
How is the average return of the strategy backtests results calculated?
The average return?
Yeah.
So
I mean, I don't know. We're right up against opening bell. Is that something we want to talk about tomorrow, lead in tomorrow's show?
Yeah, and maybe he's looking at like how do we mark it, and from one period to the next, and we take an end of day snapshot of the NBBO, basically 30 seconds before the market closes, because that's when the markets are a little bit tighter. we take an end of day snapshot and we use the midpoint of the market to calculate the return of the premiums from one period to the next.
Excellent. And that's how you get the figure. Perfect.
Yep.
Awesome
All
job,
right.
Dima. Hopefully, Gabriel, that answers your question. If not, email support@MarketChameleon.com. Everyone, thanks for joining us. D, great job as always, my friend.
Yep.
Have a great trading
Thanks
day.
everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.